All right, let's talk about trading. If the whole world of stocks, charts, and financial markets has always seemed kind of complicated or, a bit overwhelming, you're in the right place. We're going to break it all down, simple and clear. I mean, seriously, if you've ever looked at a stock chart and felt like you were trying to read a different language, trust me, you are not alone. This whole explainer is designed to cut through that noise and give you a really solid foundation. Okay, but first, we have to get the really important, serious stuff out of the way. Trading involves a ton of risk. Everything we're about to talk about is just for educational purposes. This is absolutely not financial advice. Always remember, it's your money, so please do your own homework. All right, let's dive into section 1, the core idea. We're going to start at ground zero and just ask the simple question, what actually is trading? So at its heart, trading is really just the act of buying and selling stuff, financial instruments like stocks or currencies. But here's the key, the part that makes it trading. The goal is to profit from price changes that happen over a really short amount of time. And this brings us to a huge point you have to understand. Trading is not the same thing as investing. Investing is like planting an oak tree. You're in it for the long haul, waiting years for it to grow. Trading? That's a sprint. It's fast, it's active, and you're trying to catch moves that happen in days, hours, or sometimes even minutes. So if traders are sprinting, what are they actually trading? Let's open up the trader's toolbox and see what's inside. There are a few main players. You've got stocks, which are basically tiny little slices of ownership in a company. Then there's Forex, which is the giant worldwide market for trading currencies. You also have commodities. We're talking about real physical stuff like gold, silver, and oil. And of course, the wild west of the group, cryptocurrencies like Bitcoin, which are famous for their crazy price swings. Okay, on to our next section. How do traders decide when to buy or sell? Well, it's not just a guessing game. They learn to read the market's own language, and that language is almost always written in charts. And the number one tool for visualizing that language is the candlestick chart. Now, each one of these little red and green candles might look a bit strange, but they actually tell a really detailed story about what the price did in a certain amount of time. Let's break down a green one, which we call a bullish candle. Green means the price went up. The thick part, the body, shows you exactly where the price opened and where it closed. And those skinny lines sticking out, the wicks, they show you the absolute highest and lowest prices it hit during that time. And on the flip side, you've got the red or bearish candle. You guessed it, this tells the opposite story. The price went down. The price closed lower than where it opened for that period. When you line up all these green and red candles together, they start to form patterns that traders learn to recognize. So what's the whole point of reading these patterns? It all boils down to the oldest strategy in the book: buy low, sell high. You use the charts to try and find a low point to buy, that's called going long. Then you find a higher point to sell. That gap in between, well, that's your potential profit. Okay, I need you to lean in and listen close for this next part. Out of everything we talk about today, this section on managing your risk is, without a doubt, the single most important thing you will ever learn about trading. Seriously. Here it is, the golden rule. Don't risk more than you can afford to lose. I'm going to say it one more time. Don't risk more than you can afford to lose. Because here's the truth. No strategy works 100% of the time. You will have losing trades. That's why you should only, ever trade with money that if it vanished tomorrow, wouldn't seriously affect your life. So how do the pros actually follow that rule? They use something called smart position sizing. Look at this chart. It means you only ever risk a tiny, tiny fraction of your total money, like maybe 1 or 2% on any single trade. This means the other 98% is safe. This discipline right here is what keeps you in the game for the long run. And the main tool for enforcing that discipline is the stop-loss order. Think of it like an automated safety net. It's an instruction you set in advance to automatically sell your position if the price moves against you to a certain point. It takes the emotion out of the decision and makes sure a small loss doesn't turn into a huge one. So we've covered the basics, but what's next? What are your first steps? Well, the path forward is all about learning and practicing. And the best part is, it starts without risking a single dollar of real money. This roadmap here is perfect. Step 1, educate yourself constantly. Step 2, and this one is non-negotiable, is practice on a demo account. It's basically a flight simulator for traders. You get to use fake money in the real live markets. Only after you get good there should you even think about creating a personal plan and slowly refining it. Patience is absolutely everything. So there you have it. We've pulled back the curtain on what trading is, how to read the charts, and most importantly, how to stay safe. I hope this has cleared things up and maybe sparked a little curiosity. As you keep learning, the question on this slide is the one you should always be asking. Thanks for watching.